Hey guys, it's Ben Nathan here. Now, in today's video, I want to show you a little trick that I use to really simplify finding good pairs to be trading. Now, we're going to use this example specifically relating to scalping. So, scalping, of course, is trading in the short term. Now, most traders out there, if they're scalping, they'll just pick a technical strategy and pop it onto any old pair. So the most common thing I hear is that people just choose the euro dollar to trade and scalp because it's the most volatile. But if that's the way you're doing things, you're doing things wrong. Now, you can't really make a sustained sensible profit by just picking a pair because you like the feel of it, okay? You need to have some background information. Now, I am of course talking about at least some fundamental understanding of what's going on before you basically go on a pair. So from today, I propose to you, don't just scalp a pair because you're used to trading it and because you feel that it's going to go one way or another. Okay, I want to teach you a slightly different approach to that, and I'm just going to teach you a very, very simple, fast, easy trick to make life a little bit easier for you. Okay, all you need is a free economic calendar, so forexfactory.com is a good one. So first thing to do when you're on forexfactory.com is click on the time, make sure the time zone lines up to your own, and then if you go onto the filter, which is this little green icon here I've got, and just select high impact news only, and you'll have something that looks a little bit like this. So to find a pair to scalp, all you need to do is look for a currency with green and a currency with red. That's as simple as it gets. So the theory behind this is that a currency with some green lettering means they've had some data that was better than expected. A currency with some red data is data that was worse than expected. Okay, so to give you guys an example of what would be this working, so we've got green on the pound, as you can see, and then we've got red a little bit on the pound, but we've got red on the Australian dollar. So you pair the Aussie with the pound, so you've got red, which means weak for Aussie, green, which means strong for pound, which means, of course, the pound Aussie pair, you'd be looking for buys on that pair. Okay. Now, there are a few other elements in play in this particular example because we did have some bullish information from the Royal Bank of Australia rate statement, but I'm just showing you how this works. Okay. So let's take a look again at another example. So we'll go to last week. So here's a great one. So red on the US dollar, sorry, green on the US dollar, red on the dollar CAD. So weak CAD, strong US dollar means you look for buys on the dollar CAD pair. And on Friday, if we go back to what happened on Friday on that dollar CAD, remember that news happened at around lunchtime. So let's load up that dollar CAD chart now. So if we go back to Friday, which would have been the 29th, which is here. Here's where the news happened. This candle here. And as you can see, boom, massive move up by around 80 odd pips. And that was all as a result of that news. So once that news came out, there were plenty of scalping opportunities on that pair. Okay, so again, if we go back to the 5-minute chart and have a little look. Not that far back though. Just give me a second. Right, let's try that again. So 29th of March, or May should I say. And as you can see, there's a nice little spike up. Then it starts to pull back slightly. That's when you start getting some little fractals on the 1-minute chart especially. And then we rally up by that further 35 pips. So all of that was scalping opportunity. So again, just very small examples on how you can piece together different releases to give yourself some trades. So again, having another look. So we had a green release on a New Zealand dollar, so better than expected on the Monday, so strong New Zealand dollar. And some red releases on the Aussie and also on the pound. So again, weak GDPs, weak pound, worse days than expected. We've already got some strength in the New Zealand dollar. So again, piecing the red to the green to give you a currency pair and also a trading direction. So it's a neat little trick. So no matter how you trade, if you're a scalper, so everyone's got their own technical strategy. It's a really good way just to find a scalping pair. So maybe rather than just going and picking the euro dollar or the pound dollar, hoping for some volatility, with just a couple of moments research, in fact seconds research, you can get a high probability to your trades just by piecing together those red releases according to data that's come out worse than expected and data that's come out better than expected to find a decent pair to be trading. Now, I've got three main strategies that I scalp. Okay, now if you go over to my FX book and search for Ben Nathan FX, you'll see my results over there. But on average, we're looking at an average between 2 and 3% a month at the moment for this year. So it works, it's as simple as that. Now, if you want to learn the exact strategies I use and have a little bit more of an in-depth look about how I approach the markets each day, you can head over to the Daily Scalper website at forexmentor.com, The Daily Scalper, and you'll see we don't do big gimmicks, so we don't put a massive price tag on the service and create these massive discounts for you guys. We've just got a very good standard price of just $199 for the online version or $299 for the DVD-ROM version. And at the moment we have got a special on where you can get the full service for just $149 or $199 on DVD-ROM. Okay, now this price is exclusive to Forex Mentor, so you won't find them anywhere else. So it's a great time to hop on board and learn exactly how I scalp by heading over to the Daily Scalper now.